Hey guys, good morning. It's Tony. Before I start the video, I do want to say please like, subscribe, and comment. And if you want to join the Patreon, you can join at www.patreon.com/but I'm not a trader. I actually just released a video right before this helping you guys join the Patreon, right? And it's just a quick like minute, two video. And I know some people had issues, so that's why I just posted it. If you guys are having issues with joining the Patreon, just go to the video that I released before this, and we'll kind of go, that kind of guides you like through it and stuff. But in this video, kind of different. I wanted to talk a little bit about how to correctly diversify your portfolio for like your long term, right? Because I definitely always recommend a long term first before you start trading, right? Because you should not be trading unless you already have, some sort of, like long-term portfolio, either whether that's going to be a 401k, whether it's going to be your own long-term portfolio that you have invested in like a broker somewhere, right? But I always first recommend that everybody start a long-term, because if you start a long-term, 90% of the time, 95% of the time, 30, 40 years from now when you retire, you're going to be better than more than likely 100% of the people in the world, right? Because a lot of people do not invest on a regular basis, weekly basis, monthly basis, right? And you should just kind of just forget about it, and just keep investing for the next couple of years, right? Because at least you have that money maintained for you when you do retire, right? So how do you build a diversified portfolio, right? And the best way that I can explain this is there's really only one correct answer to this, right? There's not anything else that anybody tells you, I think specifically, is just not going to really work. The best recommendation that I have, right, is to stick to your indices, right? So if you have on TradingView, I'm going to give you guys a very simple explanation of how to do this, like a very simple way, and then a little bit more in depth, right? So when you're on TradingView, right, go to your tickers down here, go to your filters, go to sources, and then go all the way down until you find, I think it's ARCA. Should be ARCA. There you go. So my recommendation when you're starting a diversified portfolio, right, is, invest in your indices, right? Invest in, the top 10 indices that you see, right? Straight up from the sources and the filters, right? So you would invest immediately in SPY IWM, which is it's basically, the SPY is like the top 500 companies. IWM is the top 200 companies or 2,000 companies. It's like more like low cap stuff. Soxol is the semiconductor, so you have things like, Nvidia, AMD, SMCI. I think Qualcomm's in there, things like that. For the XLE, you have the energy sector, like I think it's like what is it called? Like XOM, right? You have things like, gas, electrical, things like that. So anything energy focused, right? So this is basically just a category of like indices, which is just kind of like a group of stocks, focused for like one sector, right? So XLF would be financial stuff. So you probably have like PayPal in there, maybe SoFi, things like that. For XLK, for technology, you probably have it's probably all big tech stuff, right? So again, if you want to just have a very simple way of diversifying your long-term portfolio, go through these top 10. Go through these top 10, right? Go through all of these, and you are basically just investing in like the top, 10, top 20 indices, and you're just like, hey, I want to put 5% in the top one, 5% in the next, 5% in this. So if you're investing every single month like $100, you can be like, oh, I'm gonna put $10 in SPY, $10 in IWM, $10 in Soxol, $10 in XLE, things like that, right? So that's the easiest way that I can explain the simplest, most direct long-term portfolio. Just go to your ARCA tab, right? Your ARCA filter, go down the list, right? Pick what you want to actually invest in, right? And this makes it extremely easy for you, right? The next method of having a long-term portfolio, right? And this comes down more to, it comes down more in like a very logical way of investing. And I think that there's a book that I read in college, right? I think it's called like I forgot what it's called, but it essentially breaks down your investment by like a logical level, right? And it says, and it kind of caters to like, oh, do you think this company is going to be alive in 5 years, in 10 years, right? So you kind of look at it in a way where you in your mind it's a guaranteed company that's still going to be alive in the next 10 years, right? So in 10 years, right? Let's go down the list for I have it. Let's filter this by stocks, right? So in 10 years, is Nvidia still going to be here? More than likely, Nvidia is going to probably keep growing in the next 10 years. It's the lead in AI technology, right? So obviously, Nvidia is going to be on your list for the next 10 years. Is Tesla going to be here in 10 years? More than likely, yes, right? Is it going to be here in 5 years? More than likely, yes, when you invest in Tesla. Is Apple going to be here in 10 years? I think so, right? AMD. Is AMD going to be here in 10 years? Sure. Is Meta going to be here in 10 years? Yes. Is Amazon? Yes. Microsoft? Yes. SMCI is going to be here in 10 years. I'm not too familiar with SMCI, so I might kind of not necessarily throw this into my long term, right? Coin, right? Is coin going to be here in 10 years? Do you think crypto, ultimately, this means that if you think that crypto is going to be here in 10 years, I think yes, right? Do I think it's going to have like an enormous growth in the next 10 years? I don't know about enormous, but I do think crypto is overall going to keep going up. And right, and my only reason I think crypto is going to keep going up is because of the halving on Bitcoin. That's really the only reason why I think Bitcoin is going to keep scaling towards the upside and not keep dropping and dropping. And that's why everybody should be buying Bitcoin at lows, because the halving itself is making, Bitcoin extremely, limited to own, right? Is Netflix going to be here in 10 years? I'm, maybe not. Google? Yes. Mara? Probably not. PLTR? Yes. Google? Yes. Baba? Maybe also not. Is Square going to be here in 10 years? Probably not, right? Or maybe yes. Carvana? Maybe not in 10 years. Maybe Carvana goes like up, maybe Carvana goes up like, what is it called? Maybe it goes bankrupt, right? ARM. I don't know enough about ARM to invest. Rivian. Probably not, right? So it's one of those things where you just like, do you think a company is going to be here in the next 10 years? And that way you can invest directly with those companies as opposed to indices, right? And then when the better, I wouldn't say the better alternative. It's just this is more of a way to directly have, I would say, better gains, right? Because indices generally give you some solid, maybe like a 5% to 10% on a really good year return per year. But some of these companies, for example, if you're investing in PayPal has a really good chance of, let's say, going up 50% like in the next year, right? Let's go with that. Let's go to the monthly chart. Look how low PayPal is, right? $60, right? PayPal has a really good chance of just, completely just coming back to like at least like 93 in the next year, a couple of years or so, or having a good chance of recovery. If they don't recover, right, then obviously you can drop super low. So it is risky investing in individual stocks. But if you pick them really well, you can do really well in the next couple of years, right? Again, there's a lot of different ways of investing. Diversification is extremely important. But if you're new to trading and new to your long term, my first recommendation is obviously go to ARCA, right? Go to the top 10 and invest in the top 10, right? That's obviously, this is not financial advice, do whatever you want. But if I were to start my long term over again, I would literally just invest in like the top 10, top 20 indices. It's very easy, very straightforward. You don't have to think about it too much. So I hope that helps, a couple of people. It should be extremely easy to just kind of go down the list and like invest in these, even the top 10, right? And this, you have to remember that this is long term, right? Long term, you're definitely looking at, having some nice returns overall for retirement, right? And you shouldn't really be looking at this day to day. This is more of like, let me check my portfolio every month, right? Every couple of months, because you're essentially just investing monthly or weekly or whatever you can afford, right? And then just forgetting about it till you're 60 years old, essentially. So I hope this video helps you out. Like I said, I always recommend long-term first over trading. And then once your long-term is like settled and you have a process and you're consistently investing money into your long-term, then you can start trading. So I hope this video helps somebody out. I'll see you guys later. Have a great day. Bye-bye.